I just got it live.
What is going on, y'all? Welcome back to the Bitcoin Stock Show, your weekly live stream from the Mining Pod on all things Bitcoin stocks and really principally Bitcoin mining stocks. Will, welcome to the show, man. Glad to have a little Foxley Harper duo on this beautiful afternoon. How you doing?
I'm good. I'm starting to get eaten up by mosquitoes, but I had to get outside, but inside all week, and we can rip a podcast outside. That is a privilege right there.
Will has entered the soupy environment that is Texas. He's getting destroyed by the humidity and all of the bugs that it brings. But
yeah, it's a lot.
Yeah, it's a lot different for you, for a Denver boy. So this is kind of one of the special edition shows that we have. We don't have an interview for this week. Everyone is already off eating turkey and gorging themselves on pumpkin pie and all of those things. So we're doing a special edition stock show this week where we are going to be looking at the merger and acquisition activity year to date so far in the Bitcoin mining industry from publicly traded Bitcoin miners. Now, a few caveats before we jump in. These are most of the big ticket items and the big acquisition activity that we have seen both in the news and through public filings. Obviously, all of these things have to go through public filings for these companies. There may have been a few that slipped through the crack, but these are the majority of them. And on the docket today, we've got about $478 million worth of deal flow to go through, which pretty big year so far for M&A in the Bitcoin mining industry. I can't
That's a
really
lot.
think, right? Like, I mean, is this? I should go back and look at old data, but this conceivably is one of the biggest years for M&A activity in the Bitcoin mining industry, wouldn't you say?
It has to be. I mean,
maybe
inflation
2022
alone, right?
Yeah, they got this inflation on.
Yeah.
Maybe 2022 is more, but I'm not sure.
The Compute North breakup and the selling of all those assets was certainly to the hundreds of millions of dollars, but I think with the large orders we're seeing from the big four miners like Mara, Riot, Cleanspark, Cores, and then there's also tons more with new guys popping up. It's crazy to look at market caps of some of these companies, and a $2 billion market cap miner is actually, a mid-level miner at this point in the market.
Yeah, which is
they're on
wild.
the bigger side of the mid-level, but that's wild to think about.
Yeah.
Top of last cycle, Marathon was the top, 8 billion in market cap. They're floating on 8 billion right now, and we're I think not even at the we're probably at the end of the beginning of this bull run. So I think we got a lot more to go. We'll see what their market
potentially not the beginning of the end, or at least hopefully not. All right, so we're going to go ahead and jump into it. We're going to start with Cleanspark because they had a number of deals this year, a few pretty big ones. And perhaps the most notable of them, at least the one that made the most splash, I think, is their acquisition of Grid Infrastructure, Inc. So Grid is a Bitcoin miner that has facilities in upstate New York and eastern Tennessee. And Cleanspark came out in October saying that they were purchasing Grid through a deal that is valued, enterprise value, at $155 million. Now, a caveat with this is that the actual purchase price is going to be $155 million less Grid's outstanding liabilities after subtracting out their cash position. Now, we don't have Q3 numbers for Grid right now. I am going off of their Q2 numbers to calculate this. But if we're looking at their liabilities at the end of Q2 and looking at the cash and cryptocurrencies they had on hand at the end of Q2, this would put the deal at around 80.37 million for roughly 68 megawatts. Again, they might have more megawatts online now that we are a few months removed from the end of Q2, and their cash position and their total liabilities might have changed. But if all else being equal, from the end of Q2, you're looking at about an $80 million deal, $80.37 million deal right here for Cleanspark and Grid. And I believe, according to this press release, that is an all stock based deal. So seems pretty good for Cleanspark. They get to entrench their foothold in the Southeast and Eastern Tennessee and work with a pretty friendly power authority in the TVA. TVA has been very, very open to working with miners, has been very compliant with working with the industry. They also get to increase their footprint in a new state in upstate New York. Cleanspark has been pretty active about M&A, as we'll see with a few other news items here. But any thoughts on this one, Will?
Yeah, TVA. I think that's a big reason to go to the Southeast United States, work in that area. I don't have much more. We have the other Cleanspark announcement to follow up this one, so I think we'll have more thoughts to share after we talk about that.
Yeah, let's go ahead and move on to the next one, which was, I believe this was the first one of the year. No, this was their second one of the year. So we're going in reverse order. But Cleanspark acquires 85 megawatt Bitcoin mining site for $27.5 million. Another acquisition coming out of Tennessee, 7 sites, spread out across Tennessee. I would believe they're in probably Eastern Tennessee, maybe some in Middle Tennessee. That's where a lot of the that's where a lot of the cheap power is, though. Tennessee is very rich in hydro and nuclear. So it's kind of one of the sleeper states, I think, for Bitcoin mining.
Yeah.
But pretty big deal, kind of like you said, TVA, very attractive for Cleanspark, and they're looking to continue to move into this region. I love seeing this as a Tennessee boy. It's kind of cool to see these acquisitions pop off. And again, I think pretty friendly business environment too. Like, it's a red state, generally little red tape. There haven't been reports in some of these other states like we've seen of like noise pollution, or the populace is kind of pushing back against these Bitcoin mining farms. So, and the final one, if I can go ahead and move on to this next one, and then I'll get your thoughts on all of these, Will. The final one for Cleanspark, which was actually the first one of the year, was this acquisition of 5 facilities in Georgia for 60 megawatts for a total purchasing price, cash based, of $25.8 million. So a lot of expansion for Cleanspark in the Southeast. Any thoughts here, Will?
Oh, sorry. I think my internet cut there.
That's okay.
Lots of change. Yeah, no. I think like overall, there's like Cleanspark's focus on continuing to mine Bitcoin at low cost and adding efficiency is very present compared to a lot of people. Obviously, they're a sponsor of the show, so like there is that, and I'll just have that as disclosure. But I think like the interest there for us has just been they've been very, very focused on mining Bitcoin and keeping it simple. And yes, they have gone to market in a busy year and added more hash rate, but they did that with like a pretty good balance sheet in order to accomplish this. And they purchased these units like in a good spot. I think like on their efficiency, we've kind of seen it crept back over the year, where it hasn't been as good as it was in prior years. But I think that's because they're actually expanding. A lot of like the best, most efficient miners are typically miners who have not expanded it as aggressively. So like your Hives of the world, they still have very high efficiency. Cleansparks has crept back a little bit, but I think it's just mostly because of deployment problems. So I expect that efficiency to get better as I bring on the sites in Mississippi, and more in Georgia, Tennessee, Wyoming. They're in a lot of different states. So that's my expectation. But yeah, a lot of stuff in the summer, as we
still pretty good. It's like 21 joules per terahash.
Still very good
as of October. And this is just to kind of put a cap on this. Cleanspark has made a name for itself by purchasing turnkey facilities. That most of their hash rate expansion has been from acquisitions starting in, I believe, 2022. They really kind of rocketed up to the top of the mining leaderboards because of some of these acquisitions. And really, these acquisitions, like the early ones in Georgia, like the Sandersville location and stuff like that, really put them on the map, I think, in a lot of regards, because they were not a huge miner until they started really deploying this capital, finding opportunities for, relatively cheap hash rate that's already up and running at these facilities. So one to continue to keep an eye on. Obviously, like Will said, they're a sponsor of the show, but I think their expansion strategy has been one of the sharper of the public miners, because they really find these good opportunities. All right, moving on. Let's go and take a look at our friends at Bitfarms, whose website is telling me that they do not offer financial
advice. This is an interesting one.
Yeah, it is.
Oh, that's good. No financial advice from Bitfarms.
So the Stronghold acquisition, which is still pending, maybe this is not fair to put in here, but we wanted to talk about it anyway because it's a very notable acquisition. Stronghold, it has been one of the, kind of, I hate to put it this way, but like the run to the litter in the Bitcoin mining stock race, right? They have had troubles expanding. They've not grown their hash rate very much. But importantly, they own their energy assets, which is huge. And they're one of the only publicly traded Bitcoin miners that actually owns a power plant. And so for this deal for Bitfarms, they have the opportunity, again, this is still in the process of being closed, or they're still closing this. It's maybe going to finalize in Q1 of next year. But they have the opportunity to purchase roughly 160 megawatts worth of capacity from these power plants that Stronghold operates. 83.5 megawatts in Scrubgrass, Pennsylvania, 80 megawatts, or the Scrubgrass site in Pennsylvania, and 80 megawatts from the Scrubgrass or the Panther Creek site in Pennsylvania. And this is a deal valued at approximately $125 million total enterprise value of 175 million because Bitfarms will be assuming 50 million in stronghold debt. But I really like this acquisition for a number of reasons. One, it gives Bitfarms the ability to work in power markets with PJM in Pennsylvania. So they're going to have excellent opportunities for power trading and demand response, all that kind of stuff with this acquisition. And it also expands their foothold in the US. The only site that they have in the US currently is in Washington. It's a pretty small site. I believe it's like 10 to 15 megawatts. And with this acquisition, they will be able to expand in Pennsylvania, one of the more favorable markets for mining Bitcoin at this point, and gives them kind of some regional optionality as they look towards going not just in the US, but they're also expanding in Paraguay. So that's kind of my high level thoughts with this. Curious what you think about this acquisition, Will.
Yeah, I'm wondering why this hasn't closed yet. Some of these deals take a little longer than you'd hope, so there's that. I mean, the grid thing was announced. I'm trying to remember what it was, Bitcoin Nashville or thereabouts. There was like a leaked tweet about it from Mike Alfred, and then I think they went public with it a little bit later. Maybe it's prior to that. But anyways, then it came out a few months later, and now we just saw it close a few months after that. So some of these transactions do take quite a while. They're doing them as they announce them in a lot of cases. The thing I thought was interesting with this one is the debt profile that Stronghold has had, and just the ability of a deep balance sheet that Bitfarms has to be able to go in and purchase this distressed asset in a lot of ways. Stronghold Digital was looking at selling itself earlier this year before the market heated up, and at that point, I don't really know if they were able to like look for if the buyer was like already facilitating that conversation prior with this, or maybe Stronghold was able to get more favorable terms and kind of come out of that distressed position. But they certainly decided to move forward with this Bitfarms deal. The other thing for Bitfarms I just like is the geographic footprint within the United States. They've mostly stayed outside the United States. They've been in Canada. They've been in Paraguay. And I think Argentina. Correct me if I'm wrong, but at least those two South American countries I think are correct.
Yes. Yep.
That's great, but like also geopolitically, you're in Canada, which not always super favorable to Bitcoin mining, and puts memorandums and issues like that all the time. Certainly, probably wouldn't squeeze Bitcoin mining, but like a China ban, but not as favorable. And then South America is just known for being kind of tough to operate in unless you have the right politicians backing you. And we've seen like some of the power utilities also start to squeeze people lately. So we're expecting that market not to grow as fast as we thought it was going to prior this year. The fact that they're going to start building in the United States offers them more security around building out their future hash rate, which is great. The one thing that I say is notable that we should follow along is our Bitmain story with T21s. Bitfarms did purchase a lot of T21. So does that impact and have time delays with their deployments for Q4? We'll find out when their Q4 comes out next year. But I think that is something to watch. Overall, great purchase, though. I think it's a very interesting thing to pick up on the market.
Yeah, and a lot of flexibility for them. We had them on the stock show a few weeks ago, and Alex Brammer, their new senior vice president of mining operations, is a huge power nerd, big infrastructure guy coming from Talon Energy, and he oversaw a lot of their operations with their JV, or Talon Energy's former JV with TeraWulf. So I know he'll have a lot of fun with this. There's a lot that he can do working in the PJM power markets. I assume that a lot of his job will be working with those power markets and figuring out how to maximize the revenue of these sites. Just a few things to piggyback before we move on to Mara. We'll do them next. You mentioned their balance sheet. As of the end of Q3, they've got about 73 mil in cash, and then they have another 73 mil in Bitcoin on their balance sheet. So definitely enough there to cover this. Not super deep, but enough to where they could cover this outright with their cash. That being said, I wouldn't be surprised. I think they have an open an ATM currently. Wouldn't be surprised if they fund this with a little bit of dilution. Yeah, they currently have an at the market offering open, and that will probably factor in here. One more thing about the Paraguay consideration. You mentioned obviously Canada has been pretty restrictive recently. Some Bitcoin miners grandfathered in, but it's very difficult for any miners to expand in places like Quebec, because Hydro-Quebec does not want to give out any new power allotments to Bitcoin miners. So securing new allotments and expanding your megawatt footprint in certain Canadian provinces is very difficult now because of all the red tape and restrictions. Paraguay, also an interesting area because the power authority down there has been kind of cracking down on some of these cowboy miners who have been hooking up to the grid without authorization and without formal PPAs in place. I don't think that impacts a miner like Bitfarms. That being said, it is curious. They've got like 100 megawatt pipeline in Paraguay, maybe more or less. I don't have the exact figure.
Yeah.
But people, one of the criticisms of our show with them actually was people in the comments were saying, why didn't you press them about what's going on in Paraguay? Because that construction and energization has been delayed somewhat. And I think we're seeing this in the fact that right now, part of this Stronghold deal, they're actually hosting rigs at Stronghold until the deal is finalized. So they clearly wanted to speed up deployment at these Stronghold facilities because they are trying to expand their hash rate and give, the market what it wants, which is growth. And so I wonder how much what's going on in Paraguay that they haven't been able to energize that as quickly as they might have expected before. But that kind of hosting contingency with Stronghold, I think they placed like 10,000 miners there. It's interesting that they rushed that and wanted to put those machines in and sign a hosting agreement with Stronghold before this deal gets closed. It shows to me that there's some agency and some urgency there for them to try to deploy hash rate because some of their other expansions are not going as planned, perhaps. Okay. On to Marathon, who has been much more active recently in the M&A space. Famously, they purchased some assets from Generate Capital, which was one of the big winners, if you can look at it that way, in Compute North's bankruptcy. But Generate Capital ended up taking control of a bunch of Compute North facilities. One of them, Marathon, had, I think, the majority of hash rate in, if not like the super majority of hash rate in that facility. And Marathon ended up buying it for them. It was their first big foray into the asset heavy business design, right? Whereas before they were asset light and they had famously been like, we're just going to host everywhere. And then margins got super thin. They realized actually maybe we should own our own infrastructure and own our own mines. So the Generate Capital acquisition was like their first move into that business strategy. And now it seems like they're cementing it even more with this most recent acquisition where they purchased, they say adds 372 megawatt of capacity. Really, this needs some caveating. The current capacity is only actually 122 megawatts, but they have 372 in the pipeline based on PPA approvals and some of the expansions that are currently being greenfielded. But this purchase was for, we had to back these numbers out based on this reporting of them saying they purchased it for $270,000 per megawatt for the 222 megawatts that are currently being built out. But this whole thing was for roughly $60 million, $59.94 million. So seems like a pretty good deal for all the capacity that they have in the pipeline and also what's currently stood up. But yeah, I think just to really highlight that point one more time, this is important for Marathon because they have made it very clear in a lot of their investor presentations they are moving towards 100% ownership of their mining assets, something that they have not had in the past.
Yeah, it's been kind of that 50-50 split last year at the very least. I don't have a lot more insights than when we talked about when we did the show. I think Penny Ether jumped on with us. There's a actually bidding for these assets. I heard of another company, another pubco bidding for these as well. I think it's like a pretty good deal for both sides. The investor presentation here, I thought it was like slightly misleading that they're kind of combining the operational parts and the pipeline together.
Right.
A lot of people do talk about their pipeline like that. However, like it's not too uncommon for people in the mining industry to be talking about their pipeline as something that they're actually earning Bitcoin on, and they're just yet. So there's for Marathon, it just continues to add more energy The question is like, can they operate on top of this? Their operational efficiency has not been amazing. And obviously they're very focused on purchasing Bitcoin as opposed to just mining Bitcoin right now. They have so many different initiatives in-house. And they spent a lot of that Q3 talk talking about those other initiatives, not talking about their operations of their actual Bitcoin mining business. The last thing I'll say is like they are in the higher end of the cost to mine a Bitcoin compared to other miners out there. And that comes with a pivot from asset light to asset heavy. The need to hire all these people to run these Bitcoin mines. It's difficult. It's a lot of overhead. It's very hard to get all these things stood up as opposed to miners who've been kind of had their procedures down. But to counter that, don't fade the market cap. Like they have a huge market cap for a reason. They have a lot of cash to throw at problems. So if you're the big gorilla, just
a lot of cash.
Yeah, there's like a saying in tech. If you are a gorilla and there's a bunch of monkeys going for your bananas, you don't need to go pick up bananas. You just need to go beat other monkeys. You just need to beat the other monkeys so they don't pick up your bananas. And I think it's marathon a little bit. They're the big gorilla. They can go beat up the other monkeys, take their pipeline, take their sites, and they don't have to worry about the Bitcoin too much at this point, especially because they can just go purchase it with these huge financial instruments they're using.
It's super interesting to see them adopt this strategy for a Bitcoin mining stock. We were talking about that with Penny Ether. I feel like it's gimmicky, but it works. Obviously, it's working for MicroStrategy, and it seems like Marathon might be onto something in terms of like keep it simple, stupid. If the market rewards this behavior when Bitcoin's ripping, then you're kind of a fool not to do it. That being said, I still believe, Bitcoin miners are commodity producers. I would rather just see them be able to produce Bitcoin below spot. And like you said, they have one of the higher costs to produce Bitcoin. And part of the reason, like you said, is because of their asset light strategies kind of set them back. A few data points to speak to what you were saying about their cash position and being the biggest gorilla in the room. They have 27,000 Bitcoin on their balance sheet, which is, that kind of just speaks for itself. That's insane, right? Their cash position, though, is not as big as it used to be. It's 164 million, which is still it's still quite a lot of money. But obviously, they've had to pay for these acquisitions and other things, and they're expanding all of that jazz. So they are kind of the 1,000-pound gorilla in the room, or 10,000-pound or 27,000-pound gorilla with that Bitcoin hodl, right? And just one more point to highlight, they can get away with a lot because they were one of the earliest public miners. It was basically them and Riot, and I believe Hut 8 and Hive in the early days. And Riot and Marathon pivoted, I believe, in the same year in like 2017 to Bitcoin mining. Marathon was originally a patent company. Riot was a pharmaceutical company. And because of that, they have a lot of not just investor share, but mind share. They're one of the first companies that people think about when they think of publicly traded Bitcoin miners. They're included in a lot of different funds and all these other things. A lot of the big investment banks in the US hold them. So they're in like Vanguard funds. BlackRock has a position in them. So they really do have this legacy status that I think lets them get away with a lot of stuff that other Bitcoin miners just straight up couldn't, because they don't have the same brand recognition. But
yep, I think last thing, they're not even look at their website, Colin, like you won't see a lot of mention of Bitcoin on their website anymore. In recent initiative to overhaul their company, and they're more of an energy company now. So I think they're trying to change how they're perceived by the public. So yeah, go to their website. You won't see as much Bitcoin as you would have seen 6 months ago on there. But
that reminds me of
for Mara.
That reminds me of a company that I went to go. I toured a smaller miner back in when I was at Luxor, and I was talking to like one of their CEO, and he said, "Yeah, we don't really see ourselves as a Bitcoin mining company. We see ourselves as a renewable energy company," because they wanted to put up a bunch of solar panels, and I was like, "But you don't have any panels up yet." These word games, man. But we live in a postmodern age where definitions don't necessarily matter. Anyway, on that note, we're going to go back to one of the other big 5 miners in Riot and their acquisition of block mining this year, and this was announced in July 23. That gives them an opportunity to expand in Kentucky. So this was really interesting for a number of reasons. Number one, again, I just think like M&A for a publicly traded Bitcoin miner, depending on the acquisition and deal, is a juicy opportunity to expand very rapidly with turnkey facilities at a lower cost than it would necessarily cost them to greenfield these facilities and outfit them with new ASICs or older ASICs that they're shuffling around. So obviously, like that kind of goes without saying for a lot of these companies. It's just interesting to see this M&A activity. It seems like accretive for shareholders. But two, this gets them out of Texas. They finally now have a foothold in another state outside of Texas. These facilities are in Kentucky. The purchase price on this press release is $92.5 million. If you look at their filings, they listed as $113.6 million, and I think that difference there is probably the fees related to brokering this deal. Whatever investment bank they use, basically the financing fees that it took to close this deal and get it across the finish line. But yeah, I think that again, the most interesting thing about this for me is it gives them optionality in a different state. It also shows that the Southeast is really becoming a mining mecca. I mean, between Tennessee, North Carolina, and Georgia, and I guess maybe Kentucky, there's not as much going on in Kentucky, but there's a decent amount. There's a lot of Bitcoin mining going on in the Southeast. And also with some of these other acquisitions that we've seen, the Midwest, places like Ohio and Pennsylvania are becoming very rich in hash rate over the last few years. They're becoming kind of a hub in their own right as people realize that the Texas market is getting pretty saturated. So a few other points about this. I believe the operational capacity for this is 60 megawatts, and they have the opportunity to expand to 110 megawatts within the near term. And then in the long term, they can even go up to 300 megawatts. Wow. Any thoughts here, Will?
Yeah, they're getting Corsicana online. Not to pivot away from the topic at hand, but they're getting Corsicana online. A snazzy little like anime video about that on their socials the other day. And I do think that moving outside the Texas market is good. You don't know, and we were talking about this in the news roundup, which will come out after the show is already out. So it'll come out on Friday morning. But the Texas market has like these flavors of Republicans, and some of them like Bitcoin and some don't. It's a one-party state for all intents and purposes. And like the lieutenant governor of Texas hasn't always been super favorable towards Bitcoin. He's on the record stating that. But obviously, Greg Abbott, the governor, is. And there's certain bills that have floated through the House in Texas that are not super Bitcoin friendly. And there's also the question of like what's going to happen this next legislative cycle, which starts in January. And so if you are paying attention to Bitcoin and mining, you have to pay attention to what's happening in the Texas state capital. There's a reason that Riot has some pretty expensive lobbyists on their payroll. And there's a reason that Riot and a few of these companies back the Texas Blockchain Council, which we also have to work with. But there's reasons for that. And by diversifying out of Texas, that does help them out a little bit. And also, like, I think the operational part, if things are slow because everything's sequential with Riot, they've got a Rockdale building and a Corsicana building, and they're building those from greenfield up. It's kind of nice to walk into something where you can just kind of put units on the shelf. I think this came with 1 exahash, right? So it's kind of nice. It's a good win. And they have a ton of cash. So if you want to stay competitive with your peers, when your stock price has not been competing, you somewhat have to make a move and are backed into it. And that might be like the only critique I have is like, I don't remember off the top of my dome right now what the cost per megawatt this was, but I remember it being kind of expensive. So maybe we can do the quick math here if we pull it up again. But I remember it being like a little bit more expensive than some of the other purchases.
So if we look at like the consideration before we deduct out financing costs, which you should because that is baked into your cost. You're looking at 1,800,000 per megawatt, which is quite a lot. Let me just double check that.
Yeah.
So, you're looking at 1.8 mil per megawatt. But that's for the existing operational capacity, right? So block mining is a vertically integrated Bitcoin miner consisting of 2 operational sites, both in Kentucky, totally 60 megawatts of operational capacity with intention to expand up to 155. So assuming they get up to that 155, you're looking at 730. But I think that there's a clause in here where they will pay them out an additional 32.5 mil if they end up expanding to that 155 megawatts. So that was the other clause in this, is like the expansion's currently ongoing, and if the block mining team executes on that expansion, then they will be paid out another 32.5 million. But anyway you skin it, you're looking at about over $1 million per megawatt for this, and that is, to your point, that is pretty expensive.
It is expensive, and you get backed into a corner when you have some of these options.
Yeah, for sure. If the
I think you can get back into a corner a little bit. So
100%. And to just give the final number, if block mining does execute on this expansion, they get the 32.5 million bonus as stipulated in this acquisition. You're looking at 938,000 per megawatt for this acquisition. So quite a lot.
Yeah.
But maybe it's worth it if you can expand quickly into another jurisdiction and kind of hedge your risk of being in one area. Because they have like all of their capacity in Texas. They have over a gigawatt worth of capacity online in one state, which would make me nervous. But with Texas is probably fine. Okay, on to a Bitcoin mining company, but not necessarily a Bitcoin mining acquisition. We love a little HPC and AI on this Bitcoin stock show. Bit Digital vertically integrates, it's true, and acquires a tier 3 data center company. This was interesting. And if you watched our Bitcoin stock show with Sam Tabor, he actually referenced this. And I asked him, will you, because right now, or the bulk of their HPC business up until this point has been leasing a data center, leasing space at a tier 3 data center, and then selling that compute, right? And I asked him, would he consider an acquisition route in the future, because he thinks that the greenfielding or retrofitting is just a fool's errand for a Bitcoin mining company. And lo and behold, a few months later, this news drops. So Bit Digital purchased this company called Innovum for, let's see, these are in Canadian. I have my notes here for the actual US dollar, for 46 million, comprising of 39.9 million in cash, and approximately and the rest in shares. This closed in October 11th, 2024. It was reported on October 14th, 2024. A few interesting things here that I think bear pointing out. Going back to like you saying Marathon is billing itself as a power company, I believe Bit Digital at this point is probably firmly billing itself as an AI and HPC company. And with good reason, because their HPC revenue in Q3 actually eclipsed their Bitcoin mining revenue and their Ethereum staking revenue, because they used to make a lot of money mining Ethereum. Ethereum went to proof of stake. Now they stake their ETH and make a little bit from it, but not very much. But their self-mining revenue in Q3 was 10.1 million. Their HPC revenue, 12.2. So they're the first Bitcoin miner that has made one of these pivots to actually have their HPC revenue eclipse their Bitcoin mining revenue. Now, albeit it's not that much revenue to eclipse, but I still think it's notable. And to me, this shows that they're very serious about trying to expand further in the HPC realm. I think we can probably comfortably say that they will be the first miner to really kind of go full HPC with their branding and marketing now that they have really leaned into this industry. So, and with that revenue, by the way, they earn the most HPC revenue of any of the public Bitcoin miners making this HPC pivot.
Speaking of hardware, let's take a quick second and go to one of our advertisers for the show, Digital Shovel.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com. Wow, who's your voiceover guy, Will?
Whoever does the voiceovers is sexy. Okay, so
all right. So what are your thoughts on this Bit Digital stuff?
Yeah. So I actually was like tweeting at Sam Tabar this morning because he took one of our graphics and one of the graphics you actually created and used it, screenshotted it, and your name was in it. But I was like, hey, why didn't you tag Blockspace? Nonetheless, his tweet was showing the growth in HPC revenue. I was going to share it for everyone. And it's showing that Bit Digital, growing HPC profit and costs are going up. And he's saying this is going to keep going up. Markets don't care. We are, quote, probably the most deeply misunderstood and undervalued company in the entire sector. I actually encourage people to follow Samir. I think he's pretty funny on Twitter. So there is that as well. But people are paying attention not only to our amazing newsletter, which Colin is an author of, but they're also missing what is happening with Bit Digital, apparently. Now, I will say that, like, people are beating this drum really hard. A small market cap like Bit Digital is trying to make its move into, like, a bigger market cap by really honing in on the strategy. But the question is, can you actually purchase an HPC site that's going to give you the revenues that are going to be head turning for Wall Street with the market cap and cash available that Bit Digital has? And I'm not quite certain they do. And so I think that's why this purchase they made was on the smaller side. Yes, it seemed to make sense. Yes, it was a cash deal. It was a stock deal. So, like, I don't think they really spent any cash to do it, which is nice. I believe the company's at the door making revenue.
That they for sure
they did spend cash. Yeah. Okay, let's get to know it then. But I think the larger point is, like, this is not a CoreWeave core scientific deal. And it's very hard to be able to pull that off. The reason you can pull that off is because you have a lot of power and assets on the books like Core Scientific does. Bit Digital has important assets, but there's a difference in the market. And I think to say, like, you're deeply misunderstood, I'd be like, no, you're just small still. Like, you don't have the assets that Core Scientific does.
Yeah, I think that there's a chip on the shoulder there that's informing that comment. A few things here just to piggyback off your analysis, because there are a few things to point out. I think just most importantly, we're really seeing two different approaches win out with the HPC AI race between the public Bitcoin miners. All of them, or most all of them, have done a leasing structure to a certain extent. Like currently, like Core Scientific's HPC business line is leased rack space at a tier 3 data center that's already operating. And currently Bit Digital is the majority, all of their revenue currently that we have on the books has come from also that structure. And they're trying to decide, or they have decided, and Core Scientific and Bit Digital are the two poster children for this, what's going to actually be the best route. Should you just do what Bit Digital did and purchase a tier 3 data center company or a tier 3 data center and then expand accordingly? Or should you try to go Core Scientific's route and retrofit your existing facilities and partner with a HPC company like CoreWeave? And I think that, at least from what I can tell to start, and my personal opinion is, like, the Core Scientific deal is the one with the most uncertainty, but potentially the most upside. Because if they actually pull off this retrofit, which CoreWeave is bankrolling the majority of, they're going to have like 500 megawatts of HPC capacity. And they are going to be one of the larger data centers providing that compute in their market. With Bit Digital, it is a safer play because you're purchasing an HPC company that has done this before, but there's potentially less upside because how much can you actually scale that versus what you were saying with Core Scientific, where they have these massive cathedrals in Texas and they're
so
building
much
out
power
and so much power, just gobs of power. So I think that the biggest question in the market is kind of grappling with right now is like, which of these strategies will end up bearing the most fruit down the road? Now, the other thing too, in that chart, the reason why Sam loves it is because it shows Bit Digital having fat margins on that compute, right? Now, the reason that they can book that as profit, whereas Core Scientific can't, is because Core Scientific, if you look at their current operations for their leased unit, they are leasing the computers and then selling the compute. With Bit Digital, they're leasing about 50% of their HPC fleet, and then the rest of it are computers that they've purchased. So it doesn't go into cost of revenues, but it does go into their property, plant, and equipment expenses. And I think for Q2, they had like 71 million, or maybe that was for the first half of 2024. So it's like that cost is still there. It's just abstracted away because it's not in the cost of revenues because they own the equipment. So I think that bears pointing out, but really curious to see where this evolves. I'm rooting for both of them in a way. I want to see a Bitcoin mining company end up kind of breaking into this field and doing something with
it. We're rooting for all these guys. I think that's what people forget. We're an industry publication. If the industry goes kaput, then we do too.
Yeah, we do too.
We're cheering for everybody.
One last note on the Bit Digital thing. He's saying that they're overlooked, and like, just to be fair as to why maybe they're overlooked, they have not expanded their hash rate at all in like a year because they invested a lot in Ethereum mining and they made a lot of money from Ethereum mining as well. Now they're staking it. And anyway, all right, last one. We got to give our boys at Cathedra and Kungsleden a shout out. So moving on to Cathedra and Kungsleden's business combination. These two companies merged earlier in the year. Kungsleden, which in Swedish I believe stands for King's Road, isn't that right, or something like that? It's I think it's something to that effect. Anyway, Kungsleden is a Bitcoin mining and data center infrastructure company. They specialize in actually retrofitting kind of smaller Bitcoin mines for HPC compute and building kind of smaller scale, more modular HPC data centers. But this deal went through earlier in the year. It was big for Cathedra and Kungsleden, gives Cathedra the opportunity to be a little flexible with their business strategy and dabble into AI and HPC. There was not a sticker price on this. I consulted, the AI gods that be, i.e. ChatGPT, and I'm not going to cite the number that it gave me because I think it's wrong. But there was a bunch of complicated share considerations with this, but an interesting business combination from one of the smaller publicly traded Bitcoin mining stocks, but one in which I think gives them a lot of, like I said, flexibility and optionality to get into the HPC and AI race in the future. But curious if you have anything to fill in the gaps there, Will.
Not much on it. I mean, I think Kungsleden has just like a lot of operational chops. And we mentioned earlier, top of the show, Cleanspark. One of the directors, Bo, was involved in that deal with one of the Cleanspark deals we mentioned. They're really good at operating sites, creating these things at low cost, turning them around and selling them and or operating them. And I think that's a good market for Cathedra, smaller market cap miner. Doesn't get a lot of love because it's in Canada and it's hard to get liquidity there. And now they have like other ways to operate revenue in their business, or add revenue in their business rather. Last thing I'll say with them is to really focus on the Bitcoin price per share, or Bitcoin per share. And I think it's a good metric for any Bitcoin company to be focused on. Not everyone needs to be MicroStrategy or Mara. You can make a good living with a good Bitcoin company that has Bitcoin on the balance sheet and pays its employees and does things for everyone. And I think that is a good way for a lot of these mining companies to think about things. It's not always chasing the new shiny rabbit. You're a mining company and you mine Bitcoin. And that's why I like it about Cathedra.
100%. All right, well, that does it for the M&A recap. Roughly $478 million so far in 2024.
Wow.
Might be more by the end of the year. Probably a little bit more than that with some of the smaller cap miners that I've not included in this analysis. But big year for Bitcoin mining. And it's going to be even larger. It's going to be even bigger.
It's gonna be bigger.
Bigger. You're going to be
Way
saying, "Oh,
bigger.
Mr. President, too much electricity."
We need electricity, like shoot off our fingers when we do that.
100%.
The Iron Q3 call was earlier today. We did not do a live stream for that. We will maybe do some recaps of that later next week, and certainly it will be in the Mining Pod newsletter, I think, next week, right?
Yeah, next week we will have Q3 updates from all of the majors. We have top 12. Iron. Yes, thank you, Penny. Definitely the best Trump quote ever. If you haven't seen Trump's Bitcoin 2024 speech, I recommend it just for some of the comedic value of it as well. But yeah, for next week's Mining Pod newsletter and for the Bitcoin Stock Show, we'll be going over Q3 numbers for these companies and a lot of stuff to pile through. I'm going to be crying my eyes out because Iron reports according to Australian accounting rules. So last quarter was the first quarter of their fiscal year 2025. Makes me go insane. But we're going to have all the numbers for you. So tune in to the Stock Show next week for that. Also subscribe to our newsletter at newsletter.blockspace.media. For that newsletter, you'll get it first thing straight in your inbox, as well as all of our news, analysis, and research, including breaking news and scoops, which we are scooping up a lot more these days. It's been pretty nice.
More scoops. Cool. Colin, I'll see you after Thanksgiving.
Yep. Happy Thanksgiving, man. And happy Thanksgiving to all of y'all. Enjoy your holidays.
See y'all.